Good afternoon, everyone. Welcome to the luncheon by Deal Street Asia and CSE Global. This is our first physical event in over 2 years, and I'm glad. I'm sure all of you are looking forward to it too. And we hope to have very interesting conversations, discussions, and insights. A great panel discussion, and also a great networking session after the panel discussion. But even as we celebrate our physical events opening up, as we discuss about record fundraisings by venture capital, private equity firms, we discuss about exits, we do acknowledge, that all of this is insignificant when it comes to the continuing trauma of the pandemic and the Ukraine crisis. But at the same time, we hope that the worst of the pandemic is behind us, and events like this will become a norm going forward. So thank you all of us for joining us. I see a full house. My name is Joji Philip. I'm the founder and editor at Deal Street Asia. I'm just going to take a couple of minutes to run you through a few slides where we're going to be looking at both China and Southeast Asia, the whole the deal landscape in 2021. But before that, there are just a few housekeeping rules, just a few slides. I'm not sure if everybody has downloaded the Slack. If not, please use the QR code. Do download Slack. That's because we have 3 quiz questions at the end, and you can use Slack to reply to the questions. And for the winners, we would love to invite you to a whiskey tasting, no agenda whiskey tasting session sometime next month. It's going to be 4 interesting single malts, 15 to 18-year-olds not available in Singapore. So do download Slack for the 3 questions that I have at the end of the slides. Okay, so if you haven't used Slack before, you can use the QR code. This is a Slack guide. I'll just wait for a minute or two. You can just use your phones. You would have got the Slack invite in the emails too, but if you haven't done so, just use the QR code and you should be good to go. Cool. Okay. Thank you. So let me kick off by we did a report with CSE Global towards the second half of last year, and I just want to present some of the findings from the report. The report was titled "Investment Officers Flourish as Wealth Finds Green Shots." And this was launched, I think we launched it around September, October last year. So at that time, we were largely looking at the data for the first half of last year. But I will also come to data, the second half of last year, and we look at the whole 2021 together. And the whole idea of doing this report was to sort of give all our readers, our audience, like a data-driven, look at investment trends from a data perspective. And I'm sure that the trends that we are seeing, that we saw in 2021, that will sort of play out over the next half a decade. So let me start with some data points on Greater China. So this is just some quick data points on Greater China. So when we did the report, we were looking at the first half of 2021. And at that time, the year was already looking spectacular. Chinese startup companies in the first 6 months of last year had already raised 40.7 billion from private equity and venture capital funds. And if you look at the full year data is not available here, but if you look at the full year data for China, despite all the regulatory challenges, all the issues in China, China had a record year. We compiled data across 12 months, and Chinese companies raised 87.4 billion across close to 2,000 deals last year. That's a 50% jump from 2020. And this comes even as we've been reading a lot of news reports on the regulatory crackdown that's happening in China, the strained relations between Beijing, and Washington. Um, and a lot of deals were led by sectors that were not really popular until 2020. And these were sectors that were sort of considered like towards the national interest of China. Things like semiconductors, healthcare was a very popular this thing, like sectors that were strategically important to China. Um, Companies that were looking at carbon neutrality by 2060, which is like a policy of China. I'll just come to Southeast Asia next. If you find it difficult to read, we'll ensure that all these data points that everybody has access to, these are from our database. All of you will get a username and password, so you can look at our research reports, you can look at all our data after the session. Okay, so Southeast Asia, again, if you look at the first 9 months, it was already a record. In the first 9 months, we already had more deals, both in deal value and deal volume, than the whole of 2020 combined. And 2020, 21 was actually a defining in the history of the venture capital private equity space in Southeast Asia. In Southeast Asia in 2021, uh, venture-backed companies raised 25.7 billion in equity and debt financing last year. Now, this is three times the amount that they raised in 2020, and total deal count grew by over 50% year on year. Uh, Another very interesting data point for Southeast Asia, in 2021, 25 startups from Southeast Asia hit the unicorn mark, which is they were valued at over a billion or more. Now, this is more than all the unicorns Southeast Asia has produced over the last 12 years. Yeah, I'm just going to get into a few specifics in terms of Southeast Asia data. These are, in terms of the verticals, these where you can see the deal volume and also the total deal value for the first 3 quarters of 2021. Several interesting things here, like companies like if you look at Boltec, which achieved a unicorn status in its Series A round, and that's a global first. And this happened in Southeast Asia. Another big development, like in Southeast Asia, is we saw some exits last year. Earlier this week, we had the Go-To IPO in Indonesia, which is among the largest listings in the world this year. Another interesting trend when it comes to Southeast Asia was just a sec, sorry. Yeah. Um, yeah, the other trend that I wanted to point out was sectors that did really well, which is e-commerce, fintech, and edtech. And one out of every $4 that was invested in Southeast Asia went to the fintech sector. Decentralized finance, which they hardly got any funding in 2020. Now that accounted for about 111 deals in Southeast Asia last year. That's a 152% jump year on year. In terms of the deal value, it was about 853 million in 2021, 5 times more than 2020. In the decentralized finance space, Southeast Asia also minted its first unicorn, which was crypto exchange Maxiport, when they announced a 100 million Series C round in August. Again, everybody must be tracking the Sky Mavis in Vietnam. They were the first company in their space globally to hit a unicorn status, and their game, I think the game is one of the most popular ones again globally, which has got more than 2.5 million active users as of December 2021. Yeah. These are some of the first 3 quarters. These are some of the top deals in Southeast Asia over the first 3 quarters of last year. Yeah. And before I conclude, I just want to spend a minute on the report that we did also talks about the risks. While at the time of doing the report, obviously we didn't anticipate the Ukraine crisis, so that's not mentioned. But there are three other risks that we do talk about. One is the boom and the bust of SPACs. 2021, at least the first part of 2021, everyone was talking about SPACs. The other risk that we talk about in the report is despite record fundraising, we hardly have profitable startups in Southeast Asia. The whole unsustainability model built on cash burn, and and the final point is the changing regulations across many countries. For example, if you look at the gig economy, I think it's just a matter of time that all of the Southeast Asian countries and as well as both other regions like China and India are going to introduce rules for the gig economy sector, and they're going to have a huge impact on some of the largest startups, be it ride hailing, be it e-commerce in the region. Uh, we have a panel discussion coming up, and we will be looking at some of these numbers a lot more closely. But before getting into the panel discussion, I would just like to invite Agnes, who's the managing director for CSE Global. To maybe take 2 to 3 minutes, talk about the firm, and then we move on to the panel discussion. Agnes, yes.
Thank you, Joji. And thank you for distinguished guests being here today. So I'd like to thank everyone for being here today, making the first few in-person business luncheons. We are CSC Group, and I represent CSC as a whole for Asia Pacific region as the managing director. So generally, just very quickly as an introduction, we are a business provider specialized in fund administration and corporate administration, as well as corporate bond agency. So when I recall when first Deal Street had actually suggested an exclusive in-person luncheon earlier this year, we, to be honest, have been really doubtful as to the turnout and the response. And it's welcoming that we realize that because of the easing of the restrictions, the turnout has been impressive. And we actually would want to say a very warm welcome to everybody who is here. And in terms of COVID, it has certainly changed the world in terms of how we live, how we work, how we price and value our everyday. Even till today, in certain parts of the world, it is still a struggle. And there definitely has been extreme uncertainty. So many industries have got hidden in terms of impact. Some business lost its script, new business opportunities turn up and evolved. The asset management and wealth management industry has been one of the most resilient sectors in the market. And I think trying times have emphasized the importance of foundation, wealth preservation, as well as diversification. To this, we can fully understand as a group CSC as a group has been one of the longest standing family business that has family business ownership since 1899. And we evolved as a global financial services partner, and now today we are one of the world's leading global financial services business leaders. Because of this, we have been extremely fortunate to have our heritage built with the continuous support of our partners and trust of our clients globally over decades and centuries. Just to kind of end this off on the speech, today we're honored to have everyone here who are professionals in the industry join us in this room, and also we will have our esteemed panel, each a representative and specialist in the industry, to take us through some of the topics. Once again, I'd like to sincerely thank the Deal Street team for doing all the heavy lifting, and also the Raffles Hotel for helping us with this arrangement. To this, we'd like to give our sincere appreciation to the team, and thank you. Hope you enjoy the event.
Thank you, Agnes. Now quiz time, just 3 questions. I hope you're all on Slack. All the answers were there in the slides that I presented earlier. Let's go to question one. Like I said, all the winners join us for our non-agenda whiskey tasting next month. Okay, so you can submit your answers on Slack. Go to the community chat option. Um, okay, question one. Yes, the top three verticals by deal value up to Q3 2021. You have three options on your screen. Okay, if you're paying attention to the slides, I'm sure this is going to be damn easy. So, okay, question two. Yeah. Which of these companies were there in the top 10 fundraisers in Southeast Asia? We've listed a bunch of them. Option A is Caro, Momo, VN Life. B is Instagram, Neum, Zendit, BigPay. C is at the Advanced Intelligence Group, Neum, and Grab. Yes? Okay. Let's look at the answers. Oh, sorry, I missed the third question. Okay. Uh, this is okay. In terms of the startup ecosystem, the three biggest risks for investors and founders are like option A is it the SPAC boom, the cash burn, the regulatory scenario in China for big tech. Option B, pandemic, again, cash burn and the changing regulatory scenario. Option three, the SPAC boom, cash burn, and the evolving regulations. Let's jump to the answers. Okay. Yeah. The top three verticals are up to Q3 2021 fintech, e commerce, and edtech. Question two. Yeah. The companies that made it to the biggest fundraisers last year. Yeah. Neum, Zendit, BigPay. I think Zendit is a company to watch out for in Indonesia. They closed a round in January at $1 billion valuation, and we understand that they're closing a new round or have closed a new round at a $3 billion valuation. That's tripling of the valuation in 3 months' time. I think that's going to be a very uniquely placed fintech firm from this part of the world. The answer to the final question. Yeah. The biggest risks are the SPACs, the cash burn, and changing regulations in the region. Yeah. Thank you all for participating. Let's get on with the panel discussion. May I invite all our panelists on stage? Welcome everyone to the panel discussion. Like I said, we have a very diverse set of panelists. I'm delighted that all of them could join us today. We did look at the data points in terms of the deal landscape for both China and Southeast Asia, especially for Southeast Asia. The data points for 2021 pointed like it was a record year. While the surge in funding that we did see last year, now that's emblematic of a young and growing market. I think it's also a testament of the confidence that global and regional investors have in this region. Southeast Asia is perhaps among the last frontiers when it comes to um, for global investors as like an emerging business and global hub, especially for technology deals. But at the same time, after having an era of excess liquidity, very loose fiscal and monetary policies in 2021, 2022 is turning out to be very, very different. Suddenly we have all the news is on high inflation, market volatility, rising geopolitical risk. So most investors now share the view that 2022 is going to be not going to be like 2021, and that's one of the core points that I want to be asking all our panelists. How does the investor community, how do venture funded companies, how do they see 2022? Just one quick observation. As media, when we talk to several companies, we already hear that several rounds of funding that were negotiated in 2021 are being renegotiated. And in some cases, they've been actually renegotiated to as much as like by about 50% lower than what was agreed last year. Uh, so before we kick off the discussions, I would like all panelists to just take a minute each to introduce themselves and their respective firms, and then we'll get into the discussion.
Sure. Hi, good afternoon, everyone. My name is Wee Hui. I'm from KPMG. I'm a tax partner with 25 years of experience in tax advisory services. I'm currently heading up the asset management and real estate practice at KPMG Singapore. So I basically focus on two things, M&A transactions as well as fund formation. And just to qualify for M&A transactions, predominantly in hard assets like real estate and infrastructure, not so much PEVC. Being a tax advisor, please do not take my response too seriously later. Thank you.
Thanks, Georgie and Agnes, for having me here, and thanks to your team for organizing this. Good afternoon, everybody. I'm Woon Ham Tan, so for Singaporeans, it's Tan Woon Ham, right? For the foreigners, it's Woon Ham Tan, and I'm a Singaporean, born bred here. I have been in private practice in a law firm for 26 years. I've been with Shukling and Bock, my current firm, for 21 years. I am blessed to head the funds practice. It's called Trust, Asset and Wealth Management. But a word about Shukling and Bock first for those who are not familiar. We are a Singapore independent law firm, number 6 by size, with 135 lawyers and 104 years of history. And we got very luminous ex-managing partner and senior management team, including people who were from the judiciary and the government sector as well. So for me, I've been very honored to set up and lead the funds practice. It's called Trust, Asset and Wealth Management. So 12 of us lawyers are specialist lawyers. We eat, live, breathe, sleep funds, fund formation, licensing application, which cross over into private wealth and family office and family funds. So that includes setting up family office, single family office, multi-family office, the EDB GIP programs, and everything that talks about setting up investment structures, raising capital deployment, all the regulatory issues, and also moving talent and moving wealth, which I think we'll talk about in a while. And I think in terms of the comments that I've been asked to give later, I need a full disclaimer as the lawyer, okay? So whatever I say that sounds politically correct and good, I attribute that to my partnership. Everything else that's controversial and not pleasing to the ears is probably my own mistakes, okay?
Yeah, Anupam?
Thank you all. My name is Anupam Ketan. I'm an executive director with Capital Square Partners. And first of all, I want to say thank you very much to Joji and the Deal Street Asia team and CSC for organizing this event today. I feel like we've all been living for the last couple of years, literally in the metaverse, if you will, on Zoom calls and Teams and other forms of virtual communication. So it's fantastic to be able to see some familiar faces again, finally after a couple of years. And thank you very much for organizing this. So about myself, many of you know me because I've been part of the Singapore Venture Capital and Private Equity Association for many years, and been a big booster of both VC and PE in the region, whether it's Singapore-based or Southeast Asian-based. I've spent about 2 decades almost in the investment markets, whether it's spread across the United States, Europe, or Asia. So again, thank you very much. It's a privilege to be able to speak with you today. And just a bit about Capital Square Partners. Capital Square Partners was founded in 2013 as a very much traditionally oriented private equity firm. And what that means is they do more or less New York-style private equity, which is leveraged buyouts. They take controlling stakes in various investment opportunities, but primarily in the tech sector. But we also do a little bit of education, healthcare, and business services. And as we've all been experiencing the post-COVID world, we also are rethinking what the next strategies are going to be in terms of investing in frontier markets within South and Southeast Asia, and also developing strategies that really drive home our interest and impact in ESG. So I think these are early days for the private equity and overall for the investment ecosystem in Singapore and Southeast Asia. And I'm very privileged and happy to be able to discuss those with you today. So thank you very much.
Thanks, Anupam. Yeah.
Thank you. So again, my name is Agnes, and I represent CSC Group as a whole. Generally, CSC is headquartered in the US. We are based in Delaware, and we've been servicing families and also professional peers over the century. We focus on corporate administration, for anything from your corporate secretarial to accounting to your fund administration and corporate trust and agency. Generally, on a fund perspective, we actually deal with everything under the sun in terms of administration, aside from the tax advisory, the legal advisory, as well as audit. So anything else, generally you could look for your administrator. So I'll be touching on a few topics today. They are not very administration focused, so I'll try my best to actually share a little bit more of what we see in the market. So thank you.
Thank you. Some of my colleagues on the stage have some limitations in terms of what they can say and can't say. I'm a VC, so I can say whatever I want. Take it with a grain of salt. It's good to be back. Georgie, Agnes, thanks so much for the invitation. Just looking, in the crowd, see so many familiar faces. So good to see everyone again. No mask. It's a pleasure. For the ones that don't know me, I'm Michael. I'm Dutch, born and raised, but I've been in Singapore for the past 8.5 years. I'm a partner at Golden Gate Ventures. We're an early stage VC fund based out of Singapore. I have an office in Indonesia, and recently opened up an office in Vietnam as well. What I would like to bring to the table today is I've had the good fortune of traveling in the past 6 months. So I've been to the US, Middle East, North Asia, mainly speaking to LPs. So I'd like to give some perspective in terms of how foreign LPs are looking at SCA at this moment. I'm looking forward to the conversation.
Thanks, Michael. Like I said, it's such a diverse panel, advisory. We have a private equity firm, venture capital firm. Let me just start. I just want to, maybe the first set of questions more in terms of setting the context and sort of introducing what we're going to be talking about for the next 45 minutes. I'll start with Thiobi. Let me start with you. I'm sure you took a look at the report that we had done, which is Investment Officers Flourish as Wealth Finds Green Shoots. And a bulk of the report was focused on the Asia opportunities going forward. Just a quick introductory remarks from you on how do you see the Asia opportunity?
Well, I'm going to give very layman response because I'm not an investment manager. I mean, how do I see Asia? I mean, Asia, to me, it's a very diverse continent with very diverse culture. But I think what's more important is as a growing middle income and lots of young people and a lot of very hardworking and smart people. So, and I think generally it's politically quite stable compared to other continents. So I think that's why you should invest into Asia. Yeah.
Tan Woon Hom, just wanted to ask you, but again, the Asia opportunity, there's both private markets and the public markets. And both the private market and public market did very, very well in 2021. If we were to look at the private capital market, how do you see it play out in 2022?
So actually, great question, and those are the questions I would ask you guys who are the pros. Right, we are the lawyers serving the fund managers, the LPs, the GPs, and the family office. So all I can say is anecdotally, in the last 12 months, what I'm seeing, and based on the discussions we have with clients and prospects now, forward-looking next 3 to 6 months, what we are seeing or thinking, our clients are thinking. So private space, private market is very active. PE, VC, tech, and a lot is Asia. So I know this is not on topic, but some of the clients are looking at US startups, US techs, as well as Israel. So I actually have 2 or 3 projects looking at Israel specific. Now, other than that, if it's Asia, before the clampdown by the Chinese government and putting a stop to all the tech space and all the DeFi space that's growing tremendously, people were still looking at the PRC for the PEVC scene and Indonesia. So India, I think our clients were looking at it, but it's a bit of a start-stop. And now with the Ukraine war and the high prices and commodity prices escalating, it's going a bit sideways. So that's our observation.
Yeah, thanks. Anupam, specifically for Southeast Asia, there are two positives, big positives for Southeast Asia. One is the durable domestic consumer market, and most economies here are like they have a export-heavy commodities component. In that context, do you think the super cycle that has been underway for the last couple of years should provide like a lasting tailwind for the latter factor, to sort of, because most of the economies here they have been boosted by natural resources related industries. And therefore, do you see the LP appetite for Southeast Asia continuing to be high or even higher than 2021? Because compared to most of the other geographies, Southeast Asia doesn't seem to have those geopolitical concerns which US or the Europe or the other markets have.
Well, thank you very much for the prescient question, Joji. It's, you're asking a fundamentally very important question about the markets, macro, and ultimately about limited partner investors and how they make allocation decisions. When I see what's been going on in the commodity markets in Asia, in particular in Southeast Asia, one thing that I see is that it's not just a super cycle, but what I would call a mega cycle. And the reason for that is because you've had mass lockdowns and quarantines for the past 2 years. I mean, right now we're reading about what terribly is happening in Shanghai, but previously it was happening in all sorts of geographies around Asia. And because of that, what ended up happening is that inventory supplies were actually relatively high to withstand those lockdowns. But as the world starts reopening again in a and if I dare even say, a post-COVID world, then what happens is those inventory stockings now are actually down. And because of that, we had, initial inflation in the first place, as you said, a super cycle. But now, with what's been going on, I guess, if you will, in Northern Asia and Eastern Europe, with the sanctions in place and with the, I guess, what we could call supply side constraints, we actually have additional forces driving inflation even further. And that's why I say that we're now actually entering a mega cycle in terms of the commodity cycle itself. And what that does is that leads ultimately to higher inflation, because central banks that inevitably want to actually devalue their currencies in a minimal way, but they do it every year targeting inflation. Let's say, for example, in the United States at 2%. Now when inflation is jumping at 10% per year, they have a very hard time of constraining that, and so they have to increase interest rates. And so on and so forth, then every other central bank has to take the lead from that, because otherwise their own currencies will be devalued, their own exports will be devalued as well. And so what we're seeing right now is actually we're seeing two things happening. One is a commodity mega cycle, and the other part, interestingly enough, is a very inflationary environment and possibly a hyperinflationary environment. Now, one of the things that the West can do is they can remain resilient, because they are, economically speaking, the main suppliers of global capital. And I'm just saying predominantly in a very generic way. However, many Asian economies, on the other side, actually need that capital to come in. So they may have large natural resource stocks, but on the flip side, they actually are still net importers. And because of that, interest rates matter to them. It matters for their currency, but it also matters to their consumption cycle. And consumption and the word consumer have, are related words. And the biggest problem that's going to happen, which I see is going to happen in Asia now, is that the consumer cycle is going to be slowed down with this inflationary environment, because what's really been driving consumer demand in Southeast Asia has primarily been the access and the loosening of credit and availability of credit. So you take all of that, and what does that mean? Ultimately, I think that means that tech investments will actually do well. And why is that? And that's because tech is, generally speaking, a disinflationary investment. What it does is it tries to solve a hard problem that is known among various constituents, whether it's businesses, consumers, or governments. And investments in that area will tend to do pretty well because they provide an opportunity for the fund managers and the investment ecosystem ultimately to succeed. And dare I say that we actually have quite a few VCs in the crowd today, along with Michael over here, who's a bona fide venture capital investor focusing on tech as well. So I think ultimately tech is the area that helps Asia survive. It's a place where allocations will be reoriented towards. And I think that ultimately is very good for the local ecosystem here in South and Southeast Asia. So thank you very much for the question.
Thanks, Anupam. Agnes, what are you seeing between real estate, infrastructure, tech, private equity, venture capital, even cryptocurrencies? Are you seeing any shift in the nature of investments?
Yeah, thank you, Joji, for the question. So generally, and this is really consistent with global reports that we've seen in 2020 and 2021. So generally, we see PE as a global growth, I would say, engine in terms of investments that have been very, very stable amongst the last 2 years, even during pandemic and economical geopolitical times. And VCs obviously are one of the engine fuels in the industry. But we do see new asset classes coming up. So in the terms, for example, ESG funds and also climate funds. So this has been a growing concern in the globalization of the funds industry. And we're going to probably cover a little bit more about that. But I guess private debt is also another asset class that has been going strong, including the new engines such as the blockchain and also cryptocurrency. So there are some restrictions from certain, I would say, jurisdictions in terms of how you invest and what you can invest, etc. But these are actually one of the growing asset classes, such as NFTs, that have come up. So we do see a shift in global investments, even with our portfolios from clients that, for instance, and also global reports, we do see a diversification in terms of what fund managers are looking at right now, as well as investors.
Got it. Michael, let me come to you, but very specifically to the venture capital space. And before that, just want to give you some data points from the VC space in Southeast Asia in 2021. So last year, according to the Deal Street Asia data, 22 VC firms in Southeast Asia hit their final close of their funds. That's actually double the number of firms that did a final close in 2020. Competition aside, we're seeing several new trends, like, there are lots of new funds that are coming up. Loads of funds did the interim closes, first and second closes in 2021. The vehicles, the VC funds are getting bigger and bigger. There have been record vehicles that have been raised in the region. So taking all of this into account, do you think there'll be this provides a very strong foundation for 2022? And just a related question in terms of, does that also mean finally we're going to see a more diverse distribution of capital, not just across countries, but also across sectors?
Yeah, I would say that 2021 needed to happen for Southeast Asia. I remember when we, sort of back in the day, 2014, 2015, you were sitting at a conference and people would talk about the Series A gap. And if you're old enough and remember the discussion, no one's talking about the Series A gap as we speak. A few years later, we were talking about the Series B gap, and you saw funds more focusing on growth and Series B investments. What we're now seeing for the first time, alluding to your point, is we're seeing multi-asset funds. We're seeing funds that are spinning out crypto funds. We're seeing funds that are doing early stage until late stage. We're seeing growth equity investors coming into the early stage venture space. I'm very confident that this needed to happen for this space for a number of reasons. A few years ago, the exits in the region were, I would almost say, too early. A company in a growth cycle had not the ability to raise. So if you were a Series B or a Series C company, you couldn't find a counterpart for you on the cap table. So you couldn't raise a round. So even if you are like a well-performing company, you might settle for M&A as opposed to going for this growth equity round. Now we're seeing, a testament to the points of last year, we're seeing a lot of companies raising Series B, Series C, Series D rounds at very healthy and sometimes expensive valuations. So one is, I would say it's a good fundament for 2022. That being said, there's also some concerns. I mentioned earlier, I've spoken with a lot of LPs over the past few months. One of their concerns is the capital coming into the region, because it's not just local funds that have raised money. We're seeing funds from the US putting money to work here as well. And they're asking, how is the dynamic going to play out for the region? Is it a hype cycle? Are we going to see those US funds leave again over the next few months? Or is it something that is going to be continuous for the region? So overall, I'd say it's been a very good fundament, but it's also important that, and we'll talk a bit more about listings later as well, but it's also important that we see sustained change within the space as well.
Yeah. Thanks, Michael. I just want to, since we are on it, maybe spend a little more time talking about exits, liquidity, and listings and IPOs. For instance, the biggest talking point, especially this week, is the GoTo IPO. This is the combination of Gojek and Tokopedia in Indonesia. And it's also among the largest IPOs in the world. And the performance of GoTo, I think, will be a huge indicator in terms of how attractive Southeast Asia will be, and even especially Indonesia, which is seeing a huge inflow, which we did see a huge inflow of capital in 2021. And I think it will also determine the level of institutional interest in this region in the near term. And Gojek did open very well. The first day, yesterday was day 2. Their shares fell 3.14% to close at 370 rupiah. But they opened day 1 very well. After they raised 1.1 billion. On the first day, the shares closed at 382 rupiah, which is up 13%. And compared to some of the other global IPOs that we've been seeing over the last couple of months, this is like a splendid performance. So, Michael, specifically related to GoTo, does it actually provide that wow factor that global and institutional investors were looking to from Southeast Asia, and does it sort of set the tone for both the region as well as Indonesia's tech sector?
Ooh, it's a very difficult question, and I'll try to answer, because there's a yes and a no part to this answer. I'd say yes, literally because it's one of the biggest IPOs globally. So of course the market is looking at, hey, what is happening? Is it like something short term? Is it long term? How sustainable is this valuation? But I also remember, if you go back to last year in November, we said the same about Grab, and we literally said this listing has to be successful, because otherwise, it's going to look bad for the region. If any of you have followed the stock price of Grab, we know it's down about 70%. I'm very conscious of not saying one company determines the outcome for the entire region. I think there are a lot of amazing companies at the Series A, B, C, D pre-IPO stage that will come to fruition over the next few years. So I'm very cautious of saying GoTo is going to be the wow example for the entire region. We're shareholders in GoTo, so of course we wish them all the best and wish them success. But I'm also aware that there's a big pipeline of companies that are looking to list over the coming years. I think what is good, and I think what is important, is that it has shown that you're able to list in the region, and I think that is a more important point. A lot of companies that are looking to list were looking at the US as sort of the sole purpose of a listing. Now that we're seeing that you can actually do a local listing and do it successfully, and I think we'll see more companies, hopefully 10, 20 companies, list in Indonesia over the next few years.
Yeah. Now that you mentioned Grab, Anupam, let me come to you. That also brings up the whole angle of SPACs. 2021, at least the first half of 2021, everybody was thinking that SPACs are the way out for lack of exits, especially for companies in Southeast Asia. It gives them the opportunities to list in the US. The second half of last year was really bad for SPACs. We've seen what happened to the Grab SPAC, which was the largest SPAC globally. And just as the SEC in the US is clamping down on SPACs, we have all of the Asian economies now starting their own SPACs. Like Singapore is like set to see more than half a dozen SPACs in the next 12 to 18 months. Indonesia has been talking about SPACs. Hong Kong has been talking about SPACs. So how do you see the road ahead for SPACs?
Well, Joji, that's a, a very prescient question, and of course, the million-dollar question right now among many of the investors in Asia. And you know, as my colleagues and co-panelists here had said previously, if you know, if I do get myself into trouble with my answer, please excuse whoever wrote my notes up for me. So with that said, you know, SPACs have historically, you know, in 2000, we had SPACs come around in 1999 and 2000. We had them again roaring in 2008, and again in 2020 and 21. And Joji, have you ever heard that expression, "this time is different"? Well, it turns out that this time actually was not very different than the previous times. And I'm just saying on a pure macroeconomic basis. You can look at the performance of SPACs, how they've done. And I think what the reason for that is because it misaligns incentives among various constituencies. You look at you know, the sponsor behind the SPAC and the actual entrepreneur behind the startup company that's trying to get this form of liquidity. And what they're doing is they're doing another deal. They're doing a bilateral deal in which, frankly, the entrepreneur is trying to see whoever's willing to pay top dollar and provide support, perhaps some operational support as they become a public company. However, the people who end up holding the actual investment are the actual public shareholders. And they don't really have the same level of information or due diligence. And I think my colleague at KPMG over here may be able to tell us a little bit more about what happens with the due diligence process during a traditional IPO. So SPACs have also been notoriously around to provide liquidity to companies that frankly needed liquidity and could not get it in any other way. So I think what you're seeing right now is you're seeing, and perhaps exacerbated by a hyperinflationary environment, but you're actually seeing SPACs not do as well, but pretty systematically and typical of their past behavior and past performance. I know we're not allowed to say that past performance predicts future performance, but you know, you can see that it certainly does rhyme in this case. Now, with that said, it's very interesting the way that Singapore, for example, is approaching the SPAC market. Singapore is saying, okay, well, we've seen what these various agency costs are and the misaligned incentives. Let's try to figure out how to reduce these issues. And so what they're doing is actually, and I think this is a fundamental change, and it'll be very interesting to see how it works out. You know, there are notable household names such as Vertex. You know, we have Vickers over here also doing a SPAC. Vadim has put his hand up right there. But we have many other companies and GPs and investors trying to do SPACs. And the fact that the sponsor is also forced to take an ownership stake within the actual SPAC themselves, meaning hold the investment through, unlike in the United States, will really, I think, hopefully align the incentives correctly. And I think that's the nuance here in Singapore, is to provide an avenue of liquidity, but also to do it in a way that's fiduciarily responsible to all involved. So, very good question. Thank you.
Agnes, let me come to you. Also want to look at some China data now that we're talking listings and exits. If you look at 2021, China did have a record year for IPOs, like across mainland China and Hong Kong. The total amount raised in IPOs was close to 140 billion. There were about 633 listings. And the IPO proceeds, there was like 7.1% increase when compared to 2020. And the number of IPOs like grew as much as 20% compared to the previous years. And Hong Kong retained, continues to be the go-to market for the big IPOs. But you know, looking beyond just these numbers, do they actually present the true story? Because if you look at China tech stocks, they had one of the worst years in 2021. So how do you see it?
Thank you, Joji. So we are fund administrators, so generally we're not fund managers, but from observation in the market and some market data generally, 2021 obviously have done really, really well in terms of IPO listings. In fact, we do know a lot of structures are actually being set up and also going through the process. These are great numbers, but comparatively, if you're looking at Q1 of 2022, although there is a number of 324 deals that we're seeing, for example, and the US amount to be about 54 billion in terms of proceeds, we do see comparatively against last year, it's a 37 percent decrease as against 2021. So you could see that despite the numbers are still very good, there are some hesitation in terms of whether people should actually go ahead with these deals. And comparatively, year on year, is actually a 54% decrease. So it has actually taken a hit, but the numbers are still promising. So I would think it really depends on what happens next, whether it's geopolitical relationships, whether it's supply chain, inflation rates, etc., or even COVID. So generally, very, very in line with what Michael has mentioned, we do see local listings to be the next popular aspects. So less of the global listings, but probably consider local listings because for jurisdictions, most of the governments are looking at promoting these listings on the ground. At the same time, there is political tension, for instance, that would deter the companies from going to a different jurisdiction to list, for instance. And this kind of sums up as to how the market trends are. But of course, these are always to be seen and to be heard.
Thanks, Agnes. Toby, let me come to you. In terms of last year, like we discussed, we spoke about earlier, was a year of record valuations. But to justify those valuations, to validate it, you need liquidity, you need exits. So how do you see the liquidity scenario panning out in 2022? Just a big picture, broad.
Yeah, that's all that I can say, big picture. I suspect that there's still a lot of dry powder there. I mean, it was mentioned earlier on that it was record-breaking for fundraising for some of the funds, so there must be a lot of liquidity in the market when it comes to private deals. I think IPO, it's probably still going to happen based on what Agnes has shared, but more local IPOs rather than global. There's strong government support in terms of specs, for instance, in Singapore. So yeah, I think there's still liquidity in the market, and hopefully that helps to support the valuation. Yeah.
Interesting. Tan Woon Hong, coming to you, we spoke about the P space, the VC space. We're also seeing family offices do a lot of investments, not just tech, but across several sectors. How do you see that space, and at least from your clients, like which are the countries and sectors in Southeast Asia that family offices see as being very attractive?
Again, anecdotally, if I use last 12 months and the current deals and the deals that we are going to sign up mandates, hopefully in the next few days, these are the single family office and private families. They are very rich in my own estimation. The ticket size of the deals, we are looking at about 50 million northwards, and the family offices that they're setting up AUM is probably 200 million northwards. So, which means net worth. They'll never tell me how much they are worth, right? So, not the banks. So, the estimation would be these are the billion-dollar bracket multi-billionaires. So, where are they from? They are from Singapore, from Europe, from North Asia, from Indonesia, Indians as well, from South Asia. And in terms of where they're deploying and where we see that they are setting up what you call private label funds or single family funds, or they are actually setting up VCCs or funds that are managed by licensed managers like yourself, so they partner up with you. And where they deploy, it's actually multi-strategy. They are quite long-term capital appreciation, long-term preservation, but there is maybe about 10 to 20, 30%, which is for risky assets. Those go into private credit, even crypto, DeFi, PEVC, startups and all. And in terms of region,
It's quite spread out, but in Asia itself, it was China before the clampdown. We see some in Vietnam, we see Indonesia, a little bit in India.
Got it. Yeah, thanks to all the panelists. I want to move on and go back to the deals landscape. Anupam, let me come to you first. But before that, just want to share some data points when it comes to the private equity in Southeast Asia. Just like the VC space, even for the P 2021 was a record year. Just in the second half of last year, Southeast Asia focused private equity funds. They raised close to $3 billion. That's three times for the corresponding period in 2020 and more than double that of 2019. Fund sizes for private equity in Southeast Asia continues to get larger. The median size of a Southeast Asia focused private equity fund is now at 384 million in 2021, which is 142% higher than 159 million in 2020 and four times higher when compared to about 100 million in 2019. There were 34 Southeast Asia focused funds that are currently in the market, and they're looking to raise close to 7 billion in total. Of this, they've already made interim closes for about 3 billion. And the other interesting trend is there are at least 44 global private equity funds that have invested in Southeast Asia last year. And if you look at, if the global funds even put 10% of their allocations to Southeast Asia, that's an additional $9 to $10 billion of capital for this region. So these are some of the data points, but just wanted to ask you, like, do these data points indicate that, the private equity landscape in Southeast Asia is still relatively small? Is it immature and therefore ripe for acceleration going forward?
Well, thank you. Joji, I think the entire industry really depends on Deal Street Asia to aggregate the data and provide us with the synopsis of what's happening so that all of us are well informed. So thank you and Deal Street Asia and all of the other providers who put that data together. When I look at the overall landscape here, clearly there's a lot of fundraising happening, and that's because historically, Asia has always, when it comes to corporate finance and investments, has historically been, relatively speaking, immature compared to the West. But the very fact that we're raising so many amounts of money, so much money, and based on my estimation, it's roughly about 20 billion that's being raised or has been raised in the past 12 months, that there is a lot of opportunity out there and there is a lot of actual interest out there for LP investors to allocate to South and Southeast Asia. And one of the things that historically has been the issue is that Southeast Asia has received the marginal dollar. It's never been the primary directive of any Western capital allocator, but it's always been receiving money only after, let's say, China and India with respect to Asia, but then also after the United States and after Europe. And therefore, what ends up happening is that Asia has always had to try to work harder, show better quality returns, and higher performance ultimately to drive the macro industry with respect to investments and private equity overall. Now, with that said, I think the subtext of your question is also about deal flow and access to deal flow. In Asia, you see a lot more SMEs and founder-led businesses today. And because of that, these companies generally tend to have less corporatization, but they also tend to be less sophisticated with respect to the capital markets. They are very sophisticated when it comes to operating and delivering on their services across geographies, whether it's Singapore, Indonesia, Malaysia, or elsewhere within Southeast Asia. However, one area where private equity can really make an impact is to work with these founder-led businesses, with the small and medium enterprises, to really help them professionalize and become a lot more efficient in the way that they access the capital markets. And that provides a great opportunity, particularly with GPs that are a little bit more patient, that are looking to work and help develop the ecosystem, whether it's from a focus on ESG, impact, returns, or the capital markets. And I think that provides a great opportunity ultimately for GPs to find places where to allocate money. And it's also a win-win because ultimately these companies are going to be valued based on their current operating performance when they're bought. But after being corporatized and having much more efficiencies of scale, they will tend to outperform in the long run. The GPs will outperform in the long run. But ultimately, it's the LP investors, the teachers, the pension funds, the hospital workers, ultimately the educators, all of those people who really depend on the ultimate return of private equity as an asset class in Asia will also succeed. And that ultimately, I think, provides us with actually a better world in which we live in. So thanks for the question.
Yeah. Thanks, Anupam. So, Michael, let me give you the same data points for the VC space for 2021. We see, like our research team put together some numbers. They've seen a 51% increase in seed deal volume. It's 81% increase for Series A, 85% for Series B. This region, there's a 45% increase in Series C. And interestingly, Series D and E were not very common in Southeast Asia earlier. But in 2021, we had as many as 6 to 8 Series D rounds and 12 Series E transactions, which is not historically, like I said, common here. And even the medium value of seed funds are up 60%. So an average seed deal in Southeast Asia today is 1.6 million. Earlier it used to be like a couple of $100,000. The average Series A across all the deals last year was 7.5 million. Earlier this was like a Series B number. And when it comes to Series C and D, we're talking about 30 and close to 70 million each. So do you see these numbers trending up in 2022? And related to that, I just wanted to ask you, like, from how do VCs see, the new asset classes like crypto and NFTs? Because that's something that came to the fore only last year.
I'd say there's a two-pronged answer in terms of if the numbers are trending up. I would say that at the very early stage, at seed and Series A, we've seen it over the past year. To your point, we've seen those numbers trending up, and they are continuing to trend up. You'll see Series A rounds of $15 to $20 million even. Where there's some compression is at the later stage. We're noticing, and this must be an effect of the current economical situation, we're seeing more scrutiny at the later stage. So investors are asking, okay, what does sustainability look like for this specific company? Are they going to be dependent on fundraising for the next 5-6 years, or are they going to be self-sufficient as a company? So we are seeing those changes a little bit at the later stage, as opposed to last year. But I would say anything at the seed and Series A, and partially Series B, is kind of still trending up in terms of valuation and also in terms of round sizes. What is interesting in 2021 is we saw a number of kind of new investors. We saw hedge funds putting money into early stage companies, something we've never seen before in Southeast Asia. I think that trend is going to end because I think those hedge funds have their own challenges, let me put it this way, at this moment. So I don't think they're going to be as aggressive at the early stage as we've seen them last year. But we are going to see a lot of the local and regional funds that have recently raised either in 2021 or are raising right now, putting more capital to work. And those funds have been getting larger. So they are going to be slightly more aggressive at the seed, slightly more aggressive at the Series A. So we see those rounds coming up. Again, at the later stage, I think we're going to see a little bit more compression because there's more ask for more sustainable metrics in these companies.
Got it. Yeah.
Yeah, for your questions, my goodness, I can talk about
crypto and
NFT
NFTs.
and crypto forever. So, but I'll keep it short. I would say initially, when I looked at the NFT space last year, it reminded me of 2016, where we had sort of the big ICO days, and everyone was chasing. Everyone and their grandmother, even mine, was chasing ICOs and investing in crypto. Slightly similar at the beginning of the NFT space. Every single friend of mine owned a Bored Ape or a Karafu or a Tasty Bones. What I'm now seeing is that people are asking, okay, what is exactly happening in this space? Like across NFTs, the prices are heavily down as opposed to last year. But what is interesting is people are asking for utility. So what you are seeing is musicians, artists, the sports world are now heavily betting on NFT. If you look at the golf industry, they are heavily betting on, all the brands are heavily betting on NFTs. We're seeing artists heavily betting on NFTs. What for me is interesting from an investor standpoint, sitting here in Singapore, is I think for the first time ever, I've seen an industry where Southeast Asia can actually leapfrog some of the global players. I'm seeing NFT artists coming from Indonesia, coming from Vietnam, coming from Philippines, being global trending NFTs. We're seeing DeFi companies being launched here. We've seen wallets here in Singapore that are becoming global players. So very bullish, and we're seeing more funds focusing on this as well. And I think, again, for the first time, we'll see Southeast Asia taking a lead position.
Interesting. Agnes, earlier you had mentioned about the ESG, climate tech funds, all of these, and we're increasingly seeing that these are part of all the discussions in the investment space. So how do you see both family offices, LPs, GPs, incorporating these into their mandates?
Yeah, so certainly this has always been increasing with globalization and also environment considerations, etc. Not just on the LP and investing level, or we see that on the national level as well. Commitments from governments to actually promote such initiatives to all the way of implementing regulatory shaping regulations, for example. So a few examples could be the SFC in terms of the ESG disclosures. MAS has also come up the same in terms of recommendations. There have also been recommendations for fund managers to consider ESG as one of the components to consider in terms of their portfolios. So this has definitely been shaping up. In terms of the type of investments that has gone into ESG, or in terms of the balance of investment that has gone into ESG. If we're looking at Asian family or Asian investor, generally their portfolios would be less focused on ESG elements as compared to an European investor or European focused investor, for example, just because the initiatives are just new starting, and this is up and coming. But if we're looking at numbers alone, we do have statistics which I've seen from a report that 10%, at least 10% of that portfolio increasingly has been allocated to an ESG element. So we do see that as a upcoming trend, but it will actually peer as against to the European investors, for instance. The type of ESG focus is also quite personal and subjective. It really depends on what the family or what the investor is looking at. It's also what preference they are also focusing on, for instance. So the market initiatives in general is that it's uptrending, but we still lack market standards in terms of ESG indicator, data to ESG tools. So I would say this is a scene to be placing your attention on, and it will become more and more important. So we've seen investors even looking for administrators. They are asking questions like, how's your ESG, corporate governance, etc. So these are becoming important factors.
Got it. Thiowi, coming to you, are we seeing any other structures or vehicles when it comes to investing in Southeast Asia? We looked at PE, VC. Are there any other structures that you're seeing?
Well, I can only discuss this in the context of funds that are being set up to invest into Southeast Asia. Not surprisingly, in the last 2 years, we see a lot of funds starting to use the Singapore structure, which is basically the variable capital company, the VCC structure that was introduced in, I think it's 2020, right? Yeah. So with the introduction of VCC, we see a lot of clients that traditionally uses the Cayman structure starting to use the VCC structure for a number of reasons. Firstly, I think a lot of these are relatively new fund managers, homegrown, and also their investors are not the typical type of investors that are very sticky to Cayman structure. They're very happy to explore new structure, and obviously the grant given by the MAS helps as well. At the same time, what we're seeing happening, from a Cayman perspective is in terms of the reputation, investors are increasingly not comfortable to be associated with investing into a tax havenish structure. With the introduction of various regulations in Cayman, it makes setting up and maintaining a Cayman fund a lot more expensive as well. So all these factors contributed to the growth of the VCC, and it's likely to continue to grow, and particularly for family offices as well, because of the confidentiality component. That's what they really, really like at the end of the day. Other than VCC, obviously in Hong Kong, they've introduced the Hong Kong limited partnership structure. That has garnered some attention as well, but predominantly from Hong Kong and Chinese investors. So I think in terms of the popularity, it's going to be quite limited. Yeah, so I guess from a structuring perspective, the other point is worth mentioning is tokenization. Increasingly, we're talking to a lot of people who are very interested to tokenize their funds, or even just tokenize real estate, or tokenize anything, even about tokenizing art pieces. So that's probably something that's up and coming from a structuring perspective.
Yeah, Woon, I just wanted to quickly get your views on onshoring, particularly in Singapore, Hong Kong, Indonesia. Like, what sort of a response have you seen towards this?
Thanks for that. So it's a tremendous plus for Singapore, not just because I'm a Singaporean and we're a Singapore law firm and we're all here. So I think I've been talking about this for the last 3 years publicly and on articles. The onshoring is real, and if you don't believe it, just ask around. It's truckloads and truckloads and truckloads. So a number of factors. Number one, the economic substance requirement imposed on all these tax havens was another nail in the coffin. Not the final nail, but another one. Then BEPS 1, BEPS 2, and I'm not an expert here, but I think BEPS 3 will be coming. Right? So in 12, if not 24 months' time, and then that may kick things a bit harder on the other side. So none of my fund managers clients, none of my fund manager clients have moved themselves or their team to Cayman or BVI. Zero. In fact, everybody had onshore. So they close off the GP, the FMCs there. If they check the box with some service providers, that's a very short-term solution with short legs. So the onshore is real. They have closed that down. At the moment, the GP can still be there, but the taxman is going to catch up. So we hear, anecdotally, not from this tax advisor, from other tax advisor, that IRAS has been calling up. Tax authorities in Indonesia, in Malaysia, in China, and Hong Kong have all been calling up some fund managers and family offices and asking, how come you have these 7 BVI companies and 3 Cayman structures there? What's going on? And what have you not told us in the last 10 years? So you don't want to spend the next 6 months answering that kind of question. So that onshoring is very real. We have 3 batches. 1, the clients already moved out before BEPS 1, before the amnesty, before the clampdown. 2, those are trying to get out, and 3 asking us how to get out. That's a bit too late. So that move is one thing. Second thing is the situation in Hong Kong. And back in 2019, it already started the first wave. So I was there in November in Zhongwan Central, and that already started a first wave of early movers, and they started a plan B and have a satellite team in Singapore. When security law kicked in last year, that was the second wave. And then because of the clampdown and the writing is more than on the wall, that Hong Kong is treated in a certain way by the Beijing government, and the uncertainty became a certainty. It's going down a certain path. So people start to realize, hey, this is it. We have to plan, we have to move the capital, we have to move the talent, we have to move the team. So that onshoring has, instead of move from Cayman or BVI to Hong Kong and Singapore, a lot of it is bypassing and coming here. And even state-owned and privately held companies controlled by PRC nationals, some actually have bypassed and given up the SFC route or SFC license and started in Singapore as a direct route. So that has been happening in a very big way in the last 12 months. It is still happening as we speak.
Got it. We're past 2:10. I think we'll wrap up. 2 very quick questions to wrap up. Michael, let me start with you. More in terms of the forecast for 2022 and beyond. 2021 was a record year. Wanted to ask you, is the era of easy money over? And the second thing wanted your views was, when it comes to Southeast Asia for tech startups, is the biggest challenge monetization? Because we really don't have any profitable tech startups in this region.
Yeah, so actually, your first question is linked to the second question, I think. So in terms of easy money, good companies will continue to fundraise, and they'll continue to fundraise at a very fast pace. I think you mentioned Zendit earlier in your presentation, where it took 3 months to get from 1 to 3 billion. We'll see similar companies raise at a similar pace. Where I think is going to get more tricky is between the Series B and Series D stage, where larger investors are just going to ask for more data points, more proof points that this business is going to be sustainable. So I think that's going to be tougher. So we'll see those fundraise periods extend as opposed to last year. I don't think easy money is ever going to go away. I just think it's gonna take more time for these companies to fundraise. And again, good companies will fundraise fast. In terms of the sort of the second part of your question, in the LP conversations that I had over the past 6 months, a lot of it was around sustainability, profitability, and when it is happening. And it used, I mean, after post WeWork, it was a question for a few months. And the question is coming back with a vengeance. People are asking more and more deeply about, is this company actually going to be sustainable if they're not fundraising? And that's going to continue.
Yeah. Anupam, again, in terms of forecast for private equity, as the restrictions are lifted, do you see a lot more private equity capital flow into real sectors such as factories? Like they need to increase productivity because of the supply constraints that we have. And again, infrastructure deals, do you see them coming back? And also other sectors like travel, hospitality. Do you see PE money flow into these spaces going forward?
So you're, Joji, you always have amazing questions to ask, and ones that sometimes stump me as well. When I look at the overall sector right now in Asia and the landscape over here, I think this concept of inflation and even a hyperinflation environment is really going to be a struggle. But with that said, ultimately, Asia, for whatever reason, historically has always benefited from arbitrage, whether it's an arbitrage of labor or overall costs or supply or many other factors. And I think that Asia will continue to benefit from more of that happening. Clearly, there is a view to shift production and manufacturing, for example, outside of China. Vietnam has been the biggest beneficiary historically, at least in the past 10 years, let's say, or 5 to 10 years. But other new markets are going to come up as well, and I think to perform much more strongly. And one that I think actually might do well is Malaysia, and the second one is Bangladesh. And the reason for that is that at least Malaysia is already a developed society. However, values over there are much more attractive than they are elsewhere. Bangladesh, on the other hand, I think is also going to provide a major opportunity to a lot of investors, primarily because it has everything that Vietnam has going for it, except it's been underappreciated and underinvested historically. And what that means is that investors will look at markets like these and say, okay, well, there's an opportunity for me to have a first mover advantage and really to be able to not only invest appropriately and make my internal rate of return, the numbers that I need to make for my LP investors, but also to overlay a focus of ESG and impact that ultimately I think helps create a new ecosystem which is beneficial to all.
Agnes, my final question to you to wrap up the panel. Which of the sectors in China do you see doing well for the rest of 2022 and beyond? It has to be outside the big tech, right?
Yeah, so definitely, I think the question about China, and we do have offices in China as well, so I'm really kind of monitoring it on a day-to-day basis. Policies in China are not very, I would say, predictable. And to be honest, and I think this space has been developing, I would also caution anything that has not been regulated will be regulated. Anything that is going through regulation will only get stronger regulations, and there will be a development in how companies are going to be performing and how they are gauging themselves in the market, for example, because in the past it has always been very quick growth and you may not have a lot of governance. And now I think a lot of the focus is on data protection, sustainability, etc., as well as consumer protection, for instance. So I would say probably that will be the trend. As always, any developed country would probably have gone through this momentum. And anything ESG would be very popular, to be honest. China is picking out ESG elements. They are looking at sustainability, for instance. Anything food tech, health tech would be popular as well. But I would say a lot of the confidence would be put with large PEs and also large companies, just because they have the capability and also resources to ensure the good credit governance that China is looking for.
To all our panelists, thank you so much for joining us. We don't have time to take audience questions, but thank you for the great discussion that we had. All our attendees, thank you once again for being part of our first event in over 2 years. We look forward, the team and I, we look forward to seeing most of you at our upcoming whiskey tasting session. We'll send over the details on email. Do enjoy the rest of the time with us, make the best of the networking opportunities, enjoy your lunch, and we'll continue the conversations over food. Thank you all.